Welcome to our third podcast for 2011. Today we travel south to Victoria, where Hamish Sutherland and his team will cover off on the Victorian market. Today we're going to focus on three key areas: the Melbourne CBD, including St Kilda Road, the South Yarra market, and out to the Mulgrave office area. I trust you enjoy today's presentation.
Hi, I'm Hamish Sutherland, Regional Director of Office Services in Victoria, and today you will be hearing an overview of the leading markets in Melbourne from Shane Burns, who looks after the Melbourne CBD, Grant Tinker, who looks after the St Kilda Road, South Bank and fringe areas, and Richard Hite, who looks after the suburban markets. Now Shane, what is the current level of activity in the Melbourne CBD office market?
Hamish, we've still got quite solid inquiry at the larger end of the market, with two of the big four banks either in the market for or negotiating on new space. We've also got good inquiry levels from the state government, who are looking to consolidate in particular tenants from 35 Spring and 55 Collins Street. We've got healthy inquiry levels in the 2,000 to 4,000 square metre bracket as well, and opportunities, however, for tenants in this range are drying up fairly quickly. At the smaller end of the market, that 500 to 800 square metre range, we've also got healthy inquiry levels, but we are seeing lack of opportunities for these tenants as well. They're starting to dry up pretty quickly also. Overall, I'd say inquiry is fairly good, however, decision making by tenants is still relatively slow.
And Shane, how do you see the market performing over the balance of this year?
Oh, there's no doubt that there is a real lack of opportunities, particularly in the prime contiguous sector. And this has been further heightened by Telstra recently re-signing at Rialto reportedly for another 2 years, and Origin Energy taking out the balance of 321 Exhibition Street. Landlords who have contiguous floors in a prime building are really well placed to push their rents and lower their incentives. Single floor tenants, there's a far greater range of choice for these guys to choose from, so I'd expect growth to be a little bit tempered in that particular bracket. Much of the growth will be demand driven, obviously. White collar growth is forecast to be quite strong during 2011. This will obviously flow onto the office sector. We're sticking to our early forecast that net face rents will grow by between 6 and 7%, with effective rental growth between 10 and 11%.
And where do you see the opportunities arising for our clients over this next period?
No doubt that landlords who have, again, prime space, well presented, well located, contiguous floors, obviously, they're going to be really well placed to push their rents. I also think that the lack of premium and A-grade opportunities will cause some overflow to lower A-grade or better B-grade landlords. So clients who are holding these assets that are well presented, preferably well located and certainly contiguous, they should be well placed to drive some rental growth as well.
Thanks Shane, it sounds like the Melbourne CBD market is going to be very exciting over the next couple of years. Now we'll hear from Grant Tinker on the St Kilda Road, South Bank and fringe market. So Grant, what is the current level of activity in your market?
Thanks Hamish. What we're seeing is an improved level of inquiry. I think the worst is over. What we are seeing is a flight to quality with stock because there are so many options out in the marketplace. As a result, the good buildings, particularly those like 484 St Kilda Road, for example, we've leased approximately 6,500 square metres of office space there. Tenants are recognising and aiming to go to the better stock. They're using this as an opportunity to do that, to trade up. As a result, we're seeing some of the incentive levels actually coming down a little bit. The deals we did late last year, the incentive levels were a lot higher than what they are this year. With respect to Richmond, again, there's limited opportunities out there. We're seeing a shuffling the deck chairs at the moment with some deals being done, and that will result in even less stock being available. And that will of course put some upward pressure on rents. South Bank is similar, it's very, very tight in there.
And Grant, how do you see your market performing over the balance of this year?
I think for the rest of the 2011, just continued momentum and again more flight to quality in the buildings in the marketplace. The biggest test for St Kilda Road will be the likes of 636 St Kilda Road and 549 St Kilda Road, where you've got 12,000 and 9,000 square metres of space available in each building. So of course that's going to put some pressure on, but both buildings we're seeing the owners, GE and Mile Market Petroleum, about to spend a large amount of money and refurb the buildings. So they're going to relaunch the buildings into the marketplace. and I think that's the right strategy. With minimal opportunities in the CBD, we're seeing there's still a massive price difference between the two, so I think we'll flow on and see some greater activity along the boulevard, St Kilda Road, South Bank and Richmond.
So Grant, what are the opportunities for your clients over this next period?
I think the opportunities for St Kilda Road, Hamish, is that if a building hasn't been refurbished in recent times, that needs to be done. As we mentioned, there's a flight to quality and it is competitive out there, so the money needs to be spent to refurb and present the building as best you can. With respect to Richmond and South Bank, if there's sites out there that can take a new office building, now's the time. I mean, there's limited opportunities out there, so it is a time to dust the plans off and look at spec building an office space.
Thanks, Grant. It's great to see there's a lot of activity in your market. And now we'll be hearing from Richard Hyde on the suburban office market. Richard, what is the current level of leasing activity in your market?
Thanks, Hamish. There's 3 pre-commitments that are about to land, being Carlisle Homes, Bristol Myers Squibb and Schneider Electric, which will give the market a boost, not only for the deals themselves, but there'll be additional space, most likely to be made available to the market with each of those pre-commitments. There's been 2,000 square metre deals that have been transacted just over the last couple of months, which is going to leave the market pretty tight in the southeast.
Richard, how do you see your market performing over the balance of this year?
Well, as I just said, Hamish, very, very tight is the word in the suburbs. Box Hill, for instance, they've already put up the no vacancy sign. There's really no space available at all over 500 square metres. In the Mulgrave, Mount Waverley area, anyone looking for in excess of 2,500 square metres, there's just no opportunity for them. So they'll either have to wait for something to come online or have something built for them, which is going to be difficult in the current market. Rents, we're now starting to see them hit $300 a square metre, and incentives have come well back now to 10%.
Following on from that, Richard, what opportunities are there for your clients over the next period?
Hamish, I see the opportunities with landlords, with lease renewals or market reviews coming up, with the rents ever increasing, so there's a great opportunity for landlords to take advantage of the market at the moment. We're also seeing some very recent examples of landlords charging premiums for tenants wishing to overhold. And they're wanting to overhold because there's that tightness in the market that I touched on earlier. Finally, I don't want to sound like a stuck record, Hamish, but I see a great opportunity for developers out there to spec an office building, because you build it and I know will come.
Thank you for tuning into the Victorian office market update. As you can see, the Melbourne CBD market is a very exciting market to be in, and it is the tightest in the country of the major centres. Victoria is on the move, and we look forward to presenting to you next time. Thank you.
I trust you enjoyed today's presentation. Our next podcast, we travel across the water to New Zealand, where Chaz Keogh and his team will deal with the New Zealand market. Thank you and hope you have a good day.